Hi, Bob.
Oh, hi, Miguel. How you doing?
How are you? Good, good. How are you?
Good. Good to hear from you. Where is everybody else, though?
I don't know. I'm the first one.
Yeah, just you and me, huh? Okay. Well, I tell you what I was going to do today is go over the test a little bit, have a little bit of a test review. Okay.
Okay.
So let's see what we have here. Oops, I'm not seeing the test. Hold on. Okay, let me get over here. Oh, did I lose it? Oh, okay, here it is here. Share it. Share it, darn it. Okay, you see it now?
Yes, I can see it.
Okay, well, this is a practice test, okay? And I assume it's close to what you're gonna get on the test, okay?
Okay.
So I've already put the answers in, and we can talk about a little bit, okay? Um, Here they're asking about a company returned goods for credit. Which one of the following is a portion of the journal entry required, assuming a perpetual system? I would I would write down what the journal entry would be to make this an easy one. Okay. In other words, a company returned goods to the supplier. Which of the following is a portion of the journal entry? Under a perpetual system, what do you have going here? You're going to have to write a journal entry where you credit the inventory. You're going to debit accounts payable, right? You're going to debit accounts payable and you're going to credit the inventory. We understand that, Miguel? You debit, we're returning goods. So you're getting rid of inventory. You're going to debit accounts payable and credit the inventory. So your answer is credit inventory. My suggestion is have these journal entries written down before the test so you can refer to them, you know? It's hard, it's a little tricky if you try to do it without writing the template down, okay? Ready for number 2? Net sales during the year, 3,648,000. Gross profit rate was 40%, okay? Gross profit rate is 40%. Well, which statement is true? We know the first one is not true because gross sales and gross profit are not the same thing as net income. So we know it's not net income. So one is wrong. The company generated 40 cents out of every asset. No, this is just inventory we're talking about. The answer is going to be C. The company generated 40 cents out of every sales dollar that is available to cover operating expenses. And again, that's your income statement template, which I would think you should have written down before the test. You have sales minus cost of goods sold equals gross profit minus operating expenses equals net income. And D is wrong. D is wrong because the inventory cost is 40%. No, the cost was 60%, not 40%. You jump in with any questions, Miguel. I'll keep going, okay?
Okay, thank you.
What statement is true about a perpetual inventory system? The answer is A, and A is the key difference. A is the key difference. It allows for the determination of cost of goods sold after each sale. That is the one key difference between the perpetual system and the periodic. You are recording a 4-line journal entry. You're debiting receivables and crediting sales for the sale you made, but you're also debiting cost of goods sold and crediting inventory for the sale you made. The other ones where it says it requires a physical inventory, no, we know that's not true. Cost of goods sold is determined based on a physical count, not under a perpetual. And it says it's used infrequently. No, it's the most frequently used system by far. This one I don't even understand. This one's a bunch of baloney to me. But maybe just have this in the back of your head. Apparently, the operating cycle of a merchandise company is longer than that of a service company. I don't remember us talking about that at all or seeing that in the book, but have that in mind. Merchandise cycle longer than service cycle. Here we go. You got a calculator with you, Miguel?
Yes, I have one.
Okay, they're asking us to come up with the cost of goods sold. And do you remember what our template is? Beginning inventory, which is what, 24,380? Plus,
Yeah.
what do we add to that, Miguel?
I'm sorry.
What do we add to the beginning inventory?
The beginning inventory.
Yeah, we start with the beginning inventory. Do you see it there at 24,380?
20. Yeah. 20.
Add the purchases, 151,580.
Mhm.
Add the freight in.
1,011,660.
Yep. And then subtract purchase returns and allowances.
So it will be 24.
4240. And then finally, you subtract from that the ending inventory, 28,620.
Okay.
And you should come up with 154,760 as the answer.
Yes.
Okay. Again, that's a template. I would have that written down on a piece of paper, when you're taking the test. Beginning inventory plus purchases minus ending inventory equals the cost of goods sold, okay?
Okay.
So that one takes a little bit of a pencil, but not terribly tough. Ivanhoe sold merchandise subject to terms 4%, 10, not 30. Which of the following is part of the journal entry to record the collection? Again, I would have all these journal entries written down. We know we're gonna debit cash, okay? We know we're gonna debit sales discounts, and we know we're gonna credit accounts receivable. So they sold merchandise for $875. Well, we know we're not gonna credit inventory for anything. We're not gonna credit accounts receivable for $910. We're gonna credit it for $875. So the answer is clearly $35. That's $875 times 0.04, okay? Now this one here, I'm not going to go over in detail with you, but practice on this, okay? I mean, you could, when you're doing this, you'll be able to see the answers eventually, right?
Mhm.
So here, they're asking you to do these journal entries. Prepare entries for the month, and then they're giving you the different code numbers for them. Purchase merchandise for cash, sold merchandise with a cost. Here is a perpetual inventory system journal entry. You're recording the sale and the cost of goods sold at the same time. Purchased, returned. So I don't see anything in here that should throw you on this. Paid the freight on a shipment. Oh, excuse me. Got a bad cold here.
Oh, don't worry.
Sniffling all over the place. So anyway, when you get to this problem on your practice test, go over it, get familiar with it.
Okay.
Whoops. Okay, here we go. We're getting involved with the bad debts expense. Oh, I'm sorry, the returns. Okay, this here is on the allowance for the returns. This is when a company has to estimate the amount of returns. There's a selling price of $1,000. Okay, estimates the cost with a, how do I want to say this? The company estimates that in the future, goods with a selling price of $1,000 and a cost of $440 will be returned. This is the one where I don't think they should have put this on the test. But what you're doing here is you're anticipating sales returns. So you're going to debit sales returns and credit that allowance for sales returns. And you're anticipating the inventory returns with this estimated inventory. I'm going to tell Cornelia that if this question comes up on the test, that we should ignore it because I really didn't go into that. And I don't think the other teachers do.
Okay.
Okay. You bought merchandise on account. You bought merchandise on account. That's not so hard. Debit inventory, credit. Oops, I'm sorry. Debit inventory, credit accounts payable. So that's pretty easy, right? That part. And
Yes.
then the selling price of the goods is $1,100. And the cost of it was, let me just see some. Knick-Knack buys merchandise, the selling price. They're telling us that they bought and sold it for $1,100. This is a wily mistake, this problem. Here's what I want you to look at. They sold it for $1,100, right?
Yes.
And the cost of goods sold was $400. You report the cost of goods sold and the sale in the same journal entry, okay?
Okay.
Same pair of journal entries. You can do it in one entry or two, whatever you like. Now, here's a whole income statement they want you to do. Look at this. They're giving you some of the numbers, but again, you know what the template is. We should by now, hopefully. Net sales minus cost of goods sold equals gross profit, minus operating expenses equals income from operation. Then they have a header for other, and that would be the gain on investments and the interest expense. So the other thing I want to find out on this test is if you guys get partial credit. To me, if you've worked on this problem for 20 minutes and made one little mistake, you shouldn't lose the entire credit for it. So I want to find that out. Okay, here's a LIFO FIFO problem, okay? Now hang in there with me here. This one's a super easy one once you read it, okay? They had a beginning inventory of 11, and then it was at $7 each. Then they bought some at 8, 9, and 10, right, Miguel?
Yes.
Let's add up the number that they bought, first of all, okay? They bought 11 plus 16 plus 26 plus 21. That comes to 99, right?
Yes.
How many did they sell? I'm sorry, that comes to 122. I did this before. That's why I'm pretty sure of the number. 11 plus 16 is 27. 27 plus 26 is 53.
21.
21, 26. 7, 26, 23, 49. Hold on. I'm confusing myself. I just did this one.
It would be 31 units.
How many units?
31 units, it wouldn't be.
Yeah, but hold on one second here. I'm having an absolute brain cramp. I did this problem before. I went through these before the class, and I got this one immediately. Correct. Now, what am I doing wrong? Did they change the numbers on me? Oh my goodness. You know what I think happened here? I went
No.
out of this. I did the practice test and went out, came back and they're different numbers. Okay.
Oh.
So all my notes are no good, but that's okay. Here we go. Let's try it. You have 11 in the beginning inventory, right?
Yes.
Plus 16, what's that? That's 27 plus 26 is 53 plus 21 is 74. So I would write that number down, 74 units purchased, right?
Yes.
How many did you sell? You sold 6 plus 11, that's 17. Plus 41 is 58, 69. So you sold 69 and you purchased 74. Would you agree?
Yes.
That means you have how many left in the inventory?
The 50.
You purchased 74 and you sold 69 of them. So how many do you have left? How many remain in inventory?
74 minus 69.
Right. So that's going to be 5, right?
Yeah.
So that makes it easy. 5 times 10 for FIFO is 50. 5 times 7 for LIFO up here is 35. Whoops. Hold on a second.
Okay.
Okay, you see the spreadsheet here?
Yes.
How many did we have in the beginning?
We had
7, right?
yes.
And the price was how much?
11. Yeah.
Okay. Then we purchased how much in the first purchase? How much was the first purchase, Miguel?
Can we see it again, please? Sorry.
Oh, you don't see the problem in front of you.
No.
My bad. You can't see it.
No, I only had in my.
I'm
my
sorry,
note-
man. Okay. But take a look at what I'm doing anyway, okay?
Mhm.
Kind of copy this the template down. We had 7 to begin, then maybe we had 5, maybe we had another 8. Okay. And we'll throw in a 10th. This is the template: 11, 12, 13, 14. Hold on. What I'm trying to say is, here's how we're going to figure the problem out. We're going to say that there was 77 here, 60, this 104, 140. If you take the beginning inventory, Miguel, like I'm doing here,
Mhm.
this will give you what's available. That's the most we could have sold. And they were telling us that we had on the inventory. They told us the inventory was 5 left. Five units under FIFO. Under FIFO and LIFO. Under FIFO, what do we still have? We have the expensive stuff still in the inventory. So the FIFO inventory would be 7 times 14 equals 98, or 5 times 5 times 14, which is 70. And the LIFO, you'd have the old stuff still in the inventory. 5 times 11. Set up the template real quick like this, and we can answer that problem, okay?
Okay.
So let me go back to sharing. New share. New share. We don't want that. It's the old share. New share. Okay. That's not a hard one if you just set them up in the proper template. Lower of cost or market, right? Lower of cost or net realizable value. That's the one exception to the cost basis. Remember, we said everything on our balance sheet is at cost. Well, it's not quite true if the market price goes below the cost. If the market price goes below the cost, we have to have an exception. It's a departure from the cost basis of accounting. What's the LIFO reserve? Just know what it is. It's the difference between the inventory value under LIFO, FIFO. You have a company and they use FIFO. They still have to compute LIFO to come up with the difference. You use FIFO for your regular business and LIFO for taxes. The difference between the two is the LIFO reserve. It's the difference between what it would be under FIFO and LIFO. Prices are going up, which is what we teach. LIFO, lower income taxes. Remember that? FIFO gives you the highest profit. LIFO gives you the lowest profit because you're selling the more expensive goods first. Therefore, you're going to pay fewer taxes under LIFO. LIFO is a good tax dodge. Here, a company bought 3 shredders. The first shredder was 53. The next one was 60. The third was 89. So this is an easy example of a question where they're saying we had one at 53, one at 60, one at 89, and they're using LIFO, and they sold 2 of them. They sold 2 of them. So they're stuck with 1. How much would the gross profit be for LIFO and FIFO? Well, under LIFO, the inventory value would be $89 because we haven't sold the new one. Under LIFO, the old one would be there. The difference between the two is $36. And I'll let you jump in with questions. What's the LIFO reserve? We just went over it. Difference between the inventory using LIFO compared to FIFO. Which method gives us the highest net income when prices are rising? FIFO. A company uses LIFO to cost its inventory. What's true? The company will pay less income taxes in periods of rising prices. Right? The company will pay less taxes because their net income is going to be lower. LIFO gives you a lower net income during a normal economic paradigm of rising prices. Oh, excuse me. Hold on. Okay, let's go to the next one. Here, they're asking phantom profit. Phantom, like a ghost, is what that means. All they're saying is, what would the profit be if they use FIFO instead of LIFO? So you just do your simple calculation there. Lower of cost or market. How do we do this, Miguel? We pick the one with the lower number. You have a calculator with you? What's the
Yes.
lower number here? 10,090.
Yes.
10,090 plus 8,540
18.
plus 9,360. And you got 27,990, right?
Yes.
That's super easy. Lower of cost to market. Now they're talking about the different controls, and I'll let you work your way through this. Not much I can do in terms of a test review, but we know that we have these 6 internal control principles: establish responsibility, segregate duties, document procedures, physical controls, independent verify, blah, blah, blah. And there's different things you can do that come under each of those. You just have to read that one chapter, which is a little on the boring side. Whatever that chapter was, chapter 7, I believe. Oh my goodness, look at all this. What are they doing to us here? Apparently they want you to do an entire cash budget, okay? An entire cash budget. And it looks like they have the cash balance. I know they haven't even finished this for us here. These are supposed to be the answers. Yep. If they give you the template, here's your beginning balance, right? 3,526. You see that, Miguel?
Yes.
So you put that over here. You put it right there, 3,526. And then you pick up your cash from customers, whatever they want to call that, cash from customers, other cash receipts. And just work your way down to the cash available minus the cash disbursements. I hope they don't put that on the test. That's too long a question to put on the test, I think. That would take, if you, I mean, I know I could do this with my eyes closed and it would still take me 15 minutes, which is a lot of time. Risk assessment. Risk assessment is not part of fraud. Risk assessment is studying your business, looking for fraud. Yeah, all these things with internal control, I'm just going to rely on you guys to read that chapter. There's not much I can do to prepare you for it. Which of the following items may cause the cash balance per bank to differ from the cash balance per books? Time lags, remember that? The deposits in transit and the outstanding checks. This one made me laugh when I saw it before. Which one of the following is not a good principle, a key principle of cash management? Well, it's good to prepare the timing of the spending. It's good to invest idle cash. It's good to keep inventory low. Maintain as much cash as possible in order to pay up. That's ridiculous. So that one is wrong, which makes it right. Which internal control is demonstrated by assigning different individuals to be responsible for related activities? That's your classic segregation of duties. Segregation. Nobody's mixed. Everybody's doing something different. Here's our allowance method, okay? The account of Barack Obama is deemed to be uncollectible. Well, what's the journal entry for a write-off of accounts receivable? It's a debit to the allowance and a credit to accounts receivable. But then it says he later paid some of it. He paid some of it. So we're going to debit AR and credit the allowance. Debit AR, credit the allowance. And then to write it off, to record a check previously written off, there we go. The bad debt expense, they're asking us to figure that out. The 110,800, the balance of accounts receivable is 110,800. You take 1.5% of 110,800, Miguel, and then you add in that 110 debit balance, and that'll give you the answer. You want to do your calculator real quick? 110,800 times 0.015
times
0.015.
16,620
plus
plus.
the 110 debit balance. Should get 1772.
Yes.
There's your answer. $33. Now here we go. Remember we did the chapter on the notes where a
Yes.
customer is unable to pay accounts receivable, so we let him turn it into a note. That's what we're talking about here. Ivanhoe accepted a note. All we're doing then is debiting notes receivable and crediting accounts receivable. We're moving it from accounts receivable to notes receivable. And at the end of the month, they accrued the interest. 5% is for 1 year. 5% times 7,440 divided by 12. Could you do that calculation for me, please?
Yes. So
7,440
okay.
times 0.05 divided by 12 should give you 31.
Yes.
Okay. Understand how that works. That 5% number represents a whole year. Now, collected the note in full. The note was 7440. So they're not showing you the whole entry here, but they paid us cash, and we credited the notes receivable plus the interest receivable. Here they're saying, what if they don't pay us? Well, then you just got to turn it back into accounts receivable. Three classes of receivables: accounts receivables and others. Accounts notes other. Accounts note others. You know the other three are wrong because you never heard us talk about these silly things. Accounts is estimated that will be not collected, things like that. Days of slumber. Which of the following is true? Okay. Number one, customers owe 168,660. Yes, that's true. How much is oh yeah, net of allowance. Yeah. You add the 166,200 plus the 2460, that'll give you 168,660, which is the amount everybody owes us. It's just that we're not going to be able to collect all of it. Okay. That's kind of a bit, this is a real bad question in terms of how it's worded. Very poor wording. Which of the following indicates when bad debts is recorded? We should know this. Only at the end of the month. It's an adjusting journal entry. You only do it at the end of the month, and you debit bad debt expense, and you credit the allowance for doubtful accounts. What are we doing when we factor the receivables, Miguel? We're just selling them to somebody, right?
Yes.
Factoring receivable. I have receivables of $1 million, Miguel. I want to sell them to you. How much will you give me? You say, I'll give you $800,000 for your $1 million. I say, okay, it's a deal. And then I have to collect $1 million and pay you back $1 million. Companies do that all the time. Maybe not that dramatically, but they do it. Sheridan has a 167,000 balance in AR and 472 debit. So keep that in mind. In those accounts prior to the adjusting it, credit sales total that amount. How much is the amount of the bad debt expense entry if he estimates it on receivables? So get your calculator going for me, please, if you would. The balance in accounts receivable is 167,000 times 0.015. Multiply that out, and now because it's a debit balance, we have to add 472 to it. You should come up with 2977.
Yes.
Okay. It's not a real easy test, to be honest with you. Okay. Prepare the journal entry for the write-off as accounts receivable. Madonna Inc. is not going to pay us. So that's our simple 2-line journal entry. We debit allowance for doubtful accounts and we credit accounts receivable. Credit accounts receivable. And then it's saying, and then it has another question. What's the cash realizable value of the AR before and after? And notice it is the same. It is the same. Have this in the back of your mind. The net realizable value. That means the AR minus the allowance equals the net realizable value. When we wrote off this debt, we took 2722 off of the AR, but we also took it off of the allowance. So there's no difference in the total. Oh man, I'm dying here. If I call in sick to work tonight, they can see me here. Know I was sick. And you should be pretty good at this, Miguel. The promissory notes, huh? Asking you to fill in the blank. Well, the first one is a 60-day note, huh? And they're telling you assume 360 days for calculation. So that's pretty easy. They're asking you to fill in the missing amounts. Oh, they don't give us the answer on this one. But this one here would be the principal is 720, right?
Yes.
Times 14%, which is for a year. You divide it by 6 to get it back to 2 months. Or you can take 720,000 times 14%, divide it by 12 and multiply by 2. Excuse me, because this is a 2-month note. Now the next note is 30 days. So here you go 85,200 times 0.13 divided by 12. And the next one is simply 165 divided by 15% divided by 2. So this one should be a pretty easy one to put on the test, okay? So I just wanted to go through it a little bit. I was hoping I don't know what happened to Brenda, what happened to Hunter, what happened to Teddy. Where is everybody? They ain't here today for some reason. So you got a little one-on-one. Any questions, Miguel? Anything else you want me to look at to help you out here?
No, I know now what I need to study, but
Yes.
yes.
Yes. Yeah, I would go over your practice test, before the test. You have a couple of days. The test is until Halloween, I think, October 31st.
Okay.
So you should have enough time to review it. In the meantime, you can always contact me with an email or a text, and I try to get back to you. So, all right then, Miguel.
Yes. Yes.
All right, I guess we'll call it a class. And good luck on the test, and we'll see you next Tuesday. Okay.
Thank you very much.
You're welcome. Bye-bye.
Bye.